Alright, in this news it says $10,000 to $50,000 offered to content creators to call XRP a fraud and praise Bitcoin. In the high stakes world of crypto, narrative is power. But what happens when that power is allegedly for sale? Serious claims have surfaced this week involving offers of up to $50,000 for content creators to disparage XRP and pivot to Bitcoin. In this video, we are going to investigate the validity of these claims and what they mean for the market. The controversy began when Crypto Dyl news alleged that individuals are offering financial inducements to XRP-focused influencers. The reported deal labeled XRP a fraud and promote Bitcoin in a positive light in exchange for payments ranging from $10,000 to $50,000. While the XRP community is on high alert, it is critical to note that as of right now, no independent verified documentation or contracts have been made public to substantiate these specific offers. Now, this is not just about tribalism. It is about legality. In 2026, regulators in the US and Europe are stricter, they are much stricter than ever. Authorities have already penalized influencers for failing to disclose paid promotions. If these bounties for negative coverage are real, they don't just violate ethics. They likely violate advertising and consumer protection laws. Undisclosed compensation to move a market is a direct path to regulatory intervention. So, why does this happen? Competition for market share and investor attention is at an all-time high. During bull cycles, FUD, or fear, uncertainty, and doubt, becomes a tool for capital redirection. For investors, the lesson is clear. Verify the source. If an influencer suddenly shifts their long-term thesis without a clear data-backed reason, you have to ask what is driving the change. Now here is my own personal opinion. In a market driven by sentiment, discipline is your greatest asset. Whether these specific allegations are proven true or not, they serve as a massive wake-up call. The fact that XRP is perceived as enough of a threat to warrant such alleged campaigns actually speaks volume about its current institutional standing. So my advice, follow the utility, follow the ledger, and ignore the noise. If someone is being paid $50,000 to tell you an asset is a fraud, they are not providing analysis. They are providing a service. So stay objective, do your own research. In this next news, it says finance expert. If Bitcoin could reach $126,000, XRP can hit $70. If Bitcoin could climb from under $2 to over 120,000, what is the realistic ceiling for XRP? Market analysts are now drawing direct parallels between Bitcoin's historical rise and XRP's current position at the $1.46 mark, suggesting that a move to $70 is not just possible, but mathematically consistent with previous market cycles. The comparison centers on Bitcoin's performance as a benchmark for digital asset scalability. Analysts note that when Bitcoin was priced at $1.46, few could have predicted its peak above $126,000. XRP currently sits at the same psychological and technical level. Proponents argue that XRP's superior transaction speed, lower fees, and targeted utility for global finance provide a stronger foundation for mass adoption than early stage Bitcoin ever had. Now, the path to $70 XRP is built on institutional volume. Unlike speculative assets, XRP is designed for cross-border payments, liquidity management, and settlement. As financial institutions move from pilot programs to full-scale deployment, the network activity and demand for liquidity are expected to increase exponentially. This shift from retail speculation to institutional utility is the primary driver cited by experts for these high valuation targets. Now, as for my own personal opinion, my analysis of this trajectory is focused on the utility multiplier. While Bitcoin serves as a store of value, XRP is being integrated into the plumbing of the global financial system. If the XRP ledger captures even a fraction of the global settlement market, the circulating supply would need to be valued significantly higher to facilitate those multi-billion-dollar transfers. A $70 target may seem high today, but in the context of global treasury management, it becomes a functional necessity. We are watching the institutional adoption rates closely to see how fast this gap closes. So, what is your long-term price target for XRP? And in this next news, it says, analyst says March will be extremely bullish for XRP, sets two price targets. Historical cycles in the crypto market often rhyme, and right now, XRP is mirroring a pattern that led to its most explosive rally in history. With the month of March approaching, technical analysts are pointing to a specific chart Fractal that suggests we are entering a phase of rapid expansion. In this video, we are going to break down the $4 and $9 price targets currently circulating in the market. Analyst Crypto Dyl here recently highlighted striking alignment between XRP's current 3-day chart and the 2017 bull run. Back then, XRP underwent a long period of price compression before entering a parabolic phase. According to this fractal analysis, the current structure shows the same ignition stage candles. If this pattern holds, the projection sets a target of $4 by early March, with a potential extension toward $9 shortly after. It is important to note that the market environment in 2026 is vastly different from 2017. XRP no longer faces the legal headwinds that suppress its price for years. Instead, the focus has shifted to Bitcoin ETF flows, global macroeconomic policy, and real-world utility. While Fractal suggests market psychology is repeating, the actual move will require significant capital inflows and sustained volume to break through key psychological resistance levels. To reach these aggressive targets, XRP must confirm a decisive breakout on high time frame charts. Traders are watching for consecutive closes above current resistance and an expansion in trading volume. A move to $4 would represent a massive shift in market cap, while a climb to $9 would require a level of retail and institutional participation similar to a late-stage bull market acceleration. In my own personal opinion, the data is grounded. And while charts, Fractal provide a fascinating roadmap, they are indicators of probability, not certainty. The convergence of technical patterns and the current fundamental strength of the XRP ledger makes March a critical month to watch. We are seeing a rare alignment of historical timing and institutional readiness. Whether XRP hits $9 in weeks or months, the structure for major trend reversal is clearly visible. Monitor the volume and stay disciplined. What is your price target for March? Let's discuss it in the comments below. Subscribe for more data-driven market updates. And this finally ends our video, and see you in the next one.